Hello, everyone. Welcome to our second stream of the day. This one is going to be focused on trading. And for this episode, I am joined once again by Sawcruhteez. How you doing today, man?
Hi, Tone. I am doing
trading.
Sorry about that. I am doing well today. I appreciate you having me on. I just got back from a delicious lunch, had my favorite pulled pork sandwich, and I am feeling ready to look at some charts.
All right, cool. You know what? I'm sending over the live chat over to you. Oh yeah, you know what? Why don't you say hi in there so that I could make you an admin?
All right. And is that going to cause feedback if I click over there right now?
Nope.
Okay, perfect.
Nope, that's just the live chat. All right, we're going to head on over to the charts. There you are. All right, and now you're a moderator. All right, cool.
Excellent.
All right. Oh, now this works. Perfect. Okay. So if you want to keep an eye on that, see if there's anything interesting, feel free to interrupt me anytime. I'll start, but I'll let you comment across the time frames. On show yesterday with Joe Saz, we took a look at the monthly chart, and I decided to start using Aikanashi for the monthly chart for no other reason than it seems to work so much better with sequential, at least on monthly. I haven't really looked at whether it's better for sequential on other time frames, but I like how it called at the top, and it had nice consolidation here, and it actually called the bottom of the last bear market and this bear market on a monthly sequential using Aikanashi. So I should have probably paid more attention to it back then, but we're paying attention to it now. And I do like this monthly chart. On Aikanashi, we are about to close as the third highest month ever, and the highest month in this year, obviously. So that is a bullish sign, even though we have 3 consecutive lower monthly highs. We're also only 10 days into the month, so of course, anything can change. So that's kind of my view on the monthly look. And the monthly is very bearish. I mean, we have our 3 moving averages. I'm using the 7, 30, and 50. They're all very bullish. We've broken the setup trend line. That's also bullish. I just don't see any bearishness here on a monthly scale. Sawcruhteez?
Yeah, it is looking quite bullish to me as well, seeing the short-term moving average recently cross back above that medium-term moving average, and the longer is starting to angle up at a steeper angle. So everything there is looking very good. I have been very interested in the Heikin-Ashi candles myself. First reason being is because of this chart right here, seeing how much better they work with the monthly TD sequential got me very intrigued to see basically what was going on behind there, what is a Heikin-Ashi candle, and then also could it potentially work better on other time frames as well. If the 8 Heikin-Ashi candles work better with the TD sequential on the monthly, then part of me is inclined to believe that it could work better on shorter time frames as well. So that was my thought process. And after looking into them, I am very much liking to use them in my analysis. And I've found that they can work really good with Consensio. I have been very much of the opinion of Tone in that the 2-period moving average has always been something that just seemed a little too short. I never really used a 2-period moving average. The shortest I really used was a 4, and now I'm even shying away from that all the way up to a 9. So when trading Consensio, I have tended to not do it how Tyler designed in terms of using a 2-period moving average as a canary in the coal mine. What I have found is that potentially the Heikin-Ashi candles can achieve that goal such that you can trade Consensio with Heikin-Ashi candles, and the Heikin-Ashi candles can kind of act as the canary in the coal mine. They are essentially calculated using the current period and the prior period, so they are could be considered a very specific form of a 2-period moving average, one that is very powerful. So I am not only liking it on the monthly TD sequential chart, I'm liking it across the board when trading Consensio, and I've also noticed that on the 4-hour it can be potentially a little bit more accurate with the TD sequential as well. So glad to see those candles up there. I'm liking that addition a lot.
Sorry, I was muted. Yeah, I'm not too familiar. To be honest, I haven't even looked up how the math is done on a Heikin-Ashi candle. I know it like takes some kind of an average, so it smooths things out a little bit. At least that's what I think it does. And it's just not something that was ever taught to me when I was studying trading. And I'm always like a traditional candlestick guy. I know candlesticks very, very well, but again, you can trade sequential on it, and I'm looking at it very nicely on a monthly chart. I've never looked at Heikin-Ashi on any other time frame besides the monthly. So again, maybe something we can look over in Bali, right? I mean, this is what's going to happen there. This is what it is. It's like a nice meeting / vacation for ideally higher level traders. And then anything you've done research on, looked at, bounce it against friends and your peers in the trading world to see if this stuff makes more sense.
Excellent.
All right, so let's move on to the weekly scale. I'm still using traditional candles for this one. And the week's almost over. Today's Friday. We got 2 more days to go. And our current close will be the highest weekly close in a while, actually. I wonder if we're higher than this area. And we are. So yeah, this would take us all the way back to like January of 2018. To me, this is pretty bullish. This is a price flip, which means that's still a no trade zone according to sequential. But yes, to me, next candle going above current candle becomes a buying opportunity. Sure, you can say that I'm late to the party, but it's the same buying opportunity that took place here at 9,500, and it's the same buying opportunity that took place here at 5,400. Just because I personally did not want to take those bullish trades for fundamental reasons, it doesn't mean that the TA wasn't telling you to go long. And this is why everyone should make their own decisions. And yeah, so going back to the moving averages, I debated Tyler on the 2-period moving average. It just never made sense to me at all. And 7 was as lowest as I can go. Now, I will also add that when I was learning trading, it was always the 20, 50, 200 simple, but the 13 exponential was also very, very popular from the professional traders that I learned to trade from. So the 13 exponential was always the lowest moving average, like the lowest numerical moving average I ever used was the 13 exponential. But now I kind of like the 7.
Yeah, I am really intrigued by specifically the 4 and the 9 when using the Consensio in combination with the TD sequential. And what I'm thinking there is in terms of the TD sequential, those are the 2 relationships that it likes. To determine the current count, it is looking at the price in relation to the last 4 candles. So when you get a price flip on the TD sequential, I like that to be in confluence with the price crossing my short-term moving average. And that's why I really like the 4-period moving average for my shortest. When the price is crossing that, it is usually in line with a price flip on the TD. And both of those are designed to tell you the same thing. They're not really signaling an entry. They're saying basically kind of no trade zone, be on alert for the next signal that comes through. So that's where I really like the 4 and the 9. And then I kind of noticed that when the 4-period moving average is crossing over the 9-period moving average, that can often be in confluence with a buy signal or a sell signal from the TD sequential, either a green 2 above a green 1 or a red 2 below a red 1. So when I'm trading two different systems together, I try to design them such that the signals will occur at a similar time as possible. So when I'm trading Consensio with the TD sequential, I'm going to start with the 4 and the 9-period. Usually start with the SMAs, and I tend to find the EMAs just do a little better job. And then from there, I will go generally all the way up to the 50, but sometimes the 30 will be what I like most, just after looking back through the history of the chart. So definitely some good tools to use together.
Oh, I had muted again. So the other thing I was going to say was, it's funny when you mentioned like the 4 and the 9, and we're talking about some of these moving averages, and you know how some people have like moving average bands. I know Willie had that for his mining stuff. You know what I just realized I've never seen anybody do? Like do a moving average band of like prime numbers, obviously not 1 or 2, or but maybe starting with a 5. So you'd have 5, 8, then 13, 21, you know, and use prime numbers all the way to like, you know, 200 or 400. And I'm really curious how relevant that may or may not be.
Yeah, I would certainly think that there could be something there. I am a big proponent of at least looking for some Fibonacci relationships with, like, if I'm looking at just a like between a 9 and an 8-period moving average, I'm almost always going to select an 8 because it is a number of phi, whereas if I am looking at the TD sequential, that's where I would go the 9. But I am inclined to think that there is going to be a lot that could be uncovered by somebody that has a really good understanding or does a lot of back testing with those different unique numbers as they relate to moving averages.
All right, so anything else you want to add to the weekly chart as far as your outlooks?
I'll just have a chart I can share myself whenever you're ready to throw the screen share over.
Sure, go for it.
All right. And I will share now. All right, can you see this okay?
Yep.
All right. So in the very last show that Tyler and I did together, we took a look at this chart here. And basically ever since, I have been saying that this is my most important chart for Bitcoin. And that is this weekly, these two trend lines, which could be making up the start of a new phase 2. I originally had this 2 drawn differently, something like this. And after talking with Tyler, he had me adjust it up here because it connected with the close right here on April 22nd. connected with this wick here, went through all these bodies, this candle, this wick on July 15th, and then the 2 candles that followed right here. On this candle, July 22nd, it really is debatable whether or not this phase line broke. And when something is debatable, that is when I want to pay very close attention for any sort of follow through or opposite reaction. And when a trend line, specifically a phase line, gets broken down.
Oh, wait, Sawcruhteez, I'm gonna, you can actually, you're still within bounds, right? So what you can do is, because as long as you don't close, right? So all you have to do is connect those 2 candles, right? So the red candle at the bottom, the one that you're crossing.
Yep.
Right? So as long as you connect the close of those 2 red candles, that is your line. Because it doesn't really matter where it begins, because it's not a violation.
Absolutely, I agree. And the way that I initially had it was something like this that looked a little bit more skeptical. And that's where when we draw trend lines, often we will need to adjust them in real time. But of course, as Tone knows, we want to be very careful with that and only do it if there is good enough, very strong evidence. So that's kind of what I was looking at here for before I adjusted this trend line. I wanted to see what sort of evidence I had that would tell me that's the way to do it. And when it gets very close to breaking down, that's when I'm going to pay very close attention to either follow through or a sharp reaction back to the upside. Because when a phase line is threatened to be broken down, it gets really close, but it doesn't. That's generally when you will get the sharpest moves back to the upside. And on the other hand, when the phase line does break down, you will expect to get significant follow through to the downside. So this close was very important, and waiting to see what happened in the days that followed was crucial. If we took out these lows at 91.18, then this thing would be done, and we'd really be expecting a significant follow through back to the downside. Whereas if we could retrace 50% of what looks to me like an extended range candle, then that would be a good enough indicator to me that I can go ahead and come in here and do exactly what Tone just said. By making a small little adjustment, we still have all of these touch points, and now we're able to connect this right to the close and seeing this sharp reaction that has followed. We got a significant bounce off of this area, and that tells me that this trend line is absolutely still intact. And this is the most important thing to me in Bitcoin right now. As long as this trend line stays intact, then we will be ripe to accelerate off from it into a phase 3. And if we just pull back to Bitcoin back in here, I'm not going to draw everything right now, but essentially right around here is what looks like very similar to what we are seeing. We broke through the phase 1, had this parabolic increase. This time has been much bigger, but what I'm really looking at here is this action that has followed, where we have consolidated and we have broken, in this case, we broke down this bullish weekly parabolic SAR, and we threatened to really break down, but it didn't happen. Instead, we found support at phase 2, got a sharp reaction off of it, and then after we broke through the parabolic SARs, which were right in line with horizontal resistance, then it was off to the races, right? So now let's come back over here. Sorry about that scrolling, and take a look. So what do we have? First time that this weekly parabolic SAR broke was on this candle here. We threatened to really
Sawcruhteez, can you go back for a second?
go back to the last part we were looking at.
Go back to that yellow circle, and
Yep.
we got and throw sequential on it. I want to see if that break was a green 2 going above a green 1 at the same time.
You got it. And we got that green 3 above a green 2. So definitely the TD entry was right in line with the parabolic break. So that is absolutely what I love seeing. And now we can put that back on over here. So here's what we're seeing now is we broke this parabolic SAR, got a big red candle that looked very scary. We found support at phase 2 and then got this basically engulfing candle that followed. Engulfing is just concerned with the bodies as far as I understand. So this would qualify. And now we've got some bearish SARs on top, which are basically in line with some horizontal resistance. So this does look to me like a definite buying opportunity if we're able to break through 12,000. However, my trading rules have me in a no trade zone if I am wanting to long when the SARs are above the weekly candles. When that is the case, I just simply have to wait for that SAR breakthrough to offer the confirmation that allows me to finally enter. So sure, I would be getting a much worse price up here than I would if I went ahead and entered today, but the strike rate would be significantly higher, and it would just be simply following my rules. And therefore, I don't really care if I get a worse price than somebody else who buys today because I'm being disciplined and sticking to a system. So here we see just a very similar sort of setup. Now we've got the green 1 on the weekly with the parabolic SARs above the price. Now we've got room for another 2 to kind of consolidate. And then if the 2 or the 3 is to break through this SAR, boom, that's going to be my ideal entry. That will tell me that I need to be fully entered. And if I'm not fully entered on that signal, then I missed out and I would have to wait for following action. So that's what I'm looking at on the weekly.
Yeah, no, and I'm with you. And this is the unfortunate part of trading sometimes, right? And a lot of new traders don't understand until they've, got wrecked on a portfolio or 2 or 3. Because if you don't have rules that you are willing to follow and trust, you will eventually blow up your portfolio because it's a slippery slope on breaking other rules. So same thing with me. Like, yes, it really sucks that the parabolic SARs are so far away from the current price. And this is why it sucks for me sometimes when you have, a giant 1 candle and then a pullback, and now you got to wait until a 2 crosses above the 1. But on the flip side, look at the red 1, the red 2, and the red 3. None of them crossed lower than the prior candle's low. So it saved me from taking on any short trades if I was an active trader in Bitcoin.
Absolutely right. And that's, to me, basically the most important part of trading, which most people fail to consider. And that is that the best traders are the best because of the trades that they avoid, not because of the trades that they take. It is the easiest thing in the world to think that the price is going up, so you buy, but it is not so easy to be disciplined and stick to a trading system. And these situations here are absolutely the most important part of any trading system that practitioners need to pay very, very close attention to. And that is how good is this at keeping me out of trades that I don't want to be in? And the TD sequential is one of the best at keeping you out of trades that aren't going to follow through, that are only short-term traps or whipsaws. So definitely having to wait can be frustrating, but that is really probably the most important part of any system, is when it tells you to wait and how effective it is at identifying those no trade zones.
Yeah, and one more example of this, if you go back to April, the big breakout candle, right? Or if you go back to candle 7 in that zone, right? So candle 7 is the one that broke the parabolic SAR. So this is when you start to become bullish based on parabolic SAR trading, but you're still consolidating. Now, right there, I mean, I don't really use the parabolic SARs. Again, not something I learned back in the day, but let's assume I did put huge emphasis on parabolic SARs. And I also put huge emphasis on breakouts out of consolidation. But it was unfortunate that I'm in a situation where I'm dealing with 8s and 9s on a weekly scale. Now, if that 8 was a 1 and that huge candle was a 2 breaking a 1 out of consolidation, after just having broken the parabolic SAR in consolidation, that would have been a no-brainer trade, even with massive leverage and confidence. But when all of your ducks don't line up, sometimes it's better to play it safe. There's always another trade coming.
Absolutely right. It's almost always best to play it safe and wait on the sidelines when feeling uncomfortable or unsure. Almost always it will be most beneficial to just wait on the sidelines for further development. And that is why it is so crucial to have a clear-cut hierarchy of indicators. And that is something that Tone does very good at. And one of my strengths, I believe, as well, is understanding that there are a number of indicators that you want to use to analyze a chart, and then knowing when they oppose each other, which one is more important. And for me, the parabolic SAR is very close to the absolute top of my totem pole. The parabolic SAR and the moving averages are the two most important to me. So for me, this was an area where I could have overlooked the 7 and the 8 and taken this long because of the weekly parabolic SAR and the moving averages starting to turn bullish. My two most important are giving me a buy signal. So therefore, I am comfortable overlooking this overbought conditions on the TD sequential. And as a matter of fact, I did take this buy signal. I was buying back in here, and I was doing so publicly on TradingView and Twitter. My only problem was that I was very confident that this was going to be the top and that we were going to resist here. So it just buying.
So was I. I was actually already long throughout that period because I went long before that. I went long at around 4K on the way down because I felt that it was oversold when it crashed. So
Yep.
I was long in that area, and I was taking my profit off that trade in that 5,000 and change zone.
Yep. That just goes to show how entering long before the price goes up at or near the bottom doesn't mean a whole heck of a lot if it's not managed as well as it should. And to be honest, everybody at the time thought that 58 to 6,000 was going to be resistance, at least short term. Even the bulls were looking at that as resistance.
And again, I ran into trouble because when it finally broke out of that range, I was already in the middle of my sequential, and I was a little hesitant on that trade. And then that 5 and 6 candle, made it overpriced.
Absolutely. This actually brings up something I've been wanting to talk to you about, and something that I've been thinking about in terms of the TD sequential. And after you get a 9, the likelihood of a 1 to 4 candle correction happening, we know that that is a very common situation. So something that I have started to wonder is the option of using a 5 above or below a 4 as an area to add to a position. So let's say we entered here on this 3 when it went above the 2 and above the 1. So we enter maybe 50 to 65% here, and then we wait for the 5 to get above the 4, because that tells us it can no longer be a 1 to 4 candle correction. Is that something you've thought about?
I usually become more confident earlier. Okay, so here's where I guess sometimes it's just bad luck. In normal situations, the moment that green 3 started trading above a green 2, that's when, and being above the 9, like that 3 candle is already telling me that this thing is not pulling back. This thing is ready to go higher. Here is the problem. That was the week that the New York AG went after Tether and Bitfinex. And normally I don't care about news in a bull market. But to me, this wasn't a bull market at the time. Like if this was the kind of news that hit in late 2016 or early 2017, I would have ignored it, because I ignore bad news for the industry in a bull market. But at the time, I mean, very few people, I mean, okay, very few responsible people were already calling for a bull market. This was around the time where we did that video, the Bitcoin bottom. But just because Bitcoin has bottomed, it still doesn't mean that we're in a bull market. Those are two very different things, right? So Absolutely. It was like the only reason, but like the main reason why this green 3 or even the green 4 going above a green 3 that didn't make me bullish was because this was the whole Tether, Bitfinex, government going after exchanges environment.
Absolutely. And as a matter of fact, I even opened a significant short position on that news because it lined up perfectly with the technicals that I was seeing. That was the 3rd week of April. And on the daily, I remember getting this 9. So we've got a daily 9 that occurs up here around resistance. And at the same time, we've got all sorts of FUD in the news. So by here, I had already covered 100% of my longs, and I had gone short. And it may look like that worked out. It certainly didn't, because I was targeting a minimum of a return back down to here. So that was my first foray with shorting this year, and I've only had.
But like in hindsight, looking at sequential, it worked. Like it was a 1 to 4 candle correction. It did not break setup trend. It consolidated without breaking the low. No red candle went below a prior red candle. Maybe the 4 did slightly, but it was like with these doji candles. And then you had a nice clean green 2 going above a green 1 then after.
Absolutely.
And even if you played it safe and kind of waited a couple of candles, and this is where a problem comes in. If you wait to get back above the 9, now you're dealing with a 5 candle, and now you're close to yet another top.
Yep. And this just goes to show how important it is to, if you're going to trade using technical analysis, to stick to a system and forget about anything else. Last time I was on, you heard Tone mention something about gold, that it looks like it's going up, even though it doesn't make any sense. So he's just going to have to trade or analyze the chart in front of him. In real time, that can be one of the hardest things to do in the world when there's all sorts of FUD going on, and there's this huge horizontal resistance at 56 200 and there's a long-term bear market, it can be really hard to interpret these candles in the same way that we are right now. And that's where most will fall short when they are looking at an indicator and thinking, man, this sure seems like, why doesn't everybody do this? This just works so well. Well, the reality is that in hindsight or through back testing, everything is going to look a lot prettier and a lot better than it will ever be in real time for one reason or another. And it's never the case more than in Bitcoin, where when things are really going on in the news and on Twitter, social media, whatever, it can be really hard to notice how effective these tools are continuing to work day in and day out.
Yeah, and again, hindsight is always 20/20. If I paid less attention to Bitcoin's fundamentals and traded the sequential, which I know very well, like a robot, I would have been way more bullish throughout this environment because the sequential did not fail.
That's a fact. All right, well, now that we've got the daily up, there is one thing that I was specifically wanting to look at, and that is the average directional index. There are a number of options on TradingView, so I search for ADX and DI. It's the one with 26,000 likes. That's the one that I will use. And let's see what it is telling us now. As it looks like we are trying to break through this boundary, it can be very difficult to identify whether or not we are looking at just a fake breakout or a legitimate breakout. Over the last couple days, there have been a number of reasons why you could think either way. And that is when it is very important for me to just trust in the average directional index. It is the best tool that I have found for identifying, distinguishing between fake breakouts and real breakouts. When a pattern or structure appears to be breaking, but the ADX is below 20, then you can have, at least I have high confidence that it will be a fake breakout. If it appears to be breaking and the ADX is crossing 20 or rolling up above 20, something like this, then we can be somewhat confident that the breakout is real. So that's what we're looking at here. The ADX just crossed 20. Let me make that a little bigger so everybody can see it all right. And we see that this black line, that's the ADX. It just crossed 20. And the red and green lines are used to identify the direction. That's the directional indicators. When the plus DI, which is green, is above the negative DI, that indicates a bullish breakout or a bull trend. And the inverse is true when the red is above the green. One thing that is really important is how far these are spread out from each other. Not only do they indicate directional movement, but also buying pressure. The farther these are spread out from each other, the higher the likelihood is that the breakout is real. Notice back in here, let's take a look back here. We had a similar sort of parallel channel that was getting some similar action as we tested it right up in here, kind of test, wick off, come back up, red candle. So some action there. The ADX stayed below 20 that entire time. And then notice as it crossed 20 right here, that is when the breakout came. And also notice how when that was occurring, the plus DI was extending up. extending itself away from the negative DI, which was extending down. So we've got ADX crossing 20 plus DI going up, negative DI going down. That's perfect. This is leaving something to be desired. The buying pressure is not going up as the boundary appears to be breaking. That is the most important thing for breakouts, is that the volume follows after the boundary appears to be violated. And here we do have the ADX crossing 20, and we do have selling pressure declining, but we also have buying pressure declining. And if buying pressure declines at resistance, then I do not expect a breakout. So I will be watching for this plus DI to turn back up to indicate that the buyers are following through. And that would tell me that this breakout is ready to happen. Another reason why it may not be, you guys have probably been aware of this following tone, but yesterday was a green 9 that followed this red 9. And I don't believe that Tone views this as a reversal candle, but I do view Hanging Man as a reversal candle. It does show buying pressure down here exceeding selling pressure, but more importantly to me is that it shows exhaustion. To me, this is an exhaustion candle when it follows a trend. So that is my analysis of the daily and pretty much everything that I've got to say about Bitcoin.
Hey, keep your chart on there because like mine isn't going to look any different. You're correct, Sawcruhteez. I do not see that as a resistance candle. The rally in that candle at the end of the day is now making me bullish. We had a little bit of a pullback today, but now we're coming back up. So tomorrow creates the perfect environment for me on a green 2 breaking, going above the high of a green 1 and above the close or high of the 9. Hopefully they're close to each other, which in this case they are. So wherever those numbers are, basically I would use the high of yesterday's candle. The high of yesterday's candle is $12,061. So basically, and the close was under 12,000. So to me, if Bitcoin is breaking $12,050 tomorrow, that is a long play.
Yep, I can definitely see that. And I would be interested. I would probably be doing the same thing if it wasn't for that weekly SAR putting me in a no trade zone.
Right. Now, that is a trade based on a daily scale. And the weekly to me is in a neutral state, being a green 1 with the candle coming to an end. But the fact that it's closing at a new weekly high for the year is leaning me bullish over bearish. Not to mention, well, we got the 9 before the setup trend line last time, but clearly that last 9 on a weekly did not pull back the market. We're still in 2 countdown phases on the weekly scale. So we have a 13 that's going to come up in a couple of weeks, and then there's still another 13 in the making. So there's a lot, and not to mention the monthly is bullish to me, right? So yep. From a monthly perspective, we're in a bullish trade. Weekly is still neutral, leaning bullish, and daily is on a 1 to 4 candle pullback that may have already ended. So tomorrow we'll really decide. And but now let's skip the 12 hours. Not really that important. Pull up your 4-hour chart. That one is really interesting. This is where you can draw this symmetric triangle at the top of yep, exactly. So this is, so my downward trend line is drawn a little bit differently than yours. Let me, you know what, let me hop over on my screen and then we'll, you know what? Yeah, okay, you did it. Okay, I was gonna say maybe you should talk first. It doesn't matter. So here's how I have it. Here is my channel. I keep adjusting this. This is within a hair of this line. And here, we kind of pierced it for 1 candle, not the end of the world. That is the 4-hour candle. But now I can go ahead and draw one of these symmetric triangles here. and it's pretty much due for a breakout, which again is going to be very, very timely if it happens tomorrow on the daily and almost, near the weekly, flipping over to a green 2 above a green 1, and we're going to break this resistance line, and that makes me very bullish.
Yeah, this is definitely an interesting chart. I think that we're on the same page that the symmetrical triangles are my least favorite pattern. They consistently have to get redrawn, and they look like they're getting broken, and then they just come right back and have to get redrawn. But this thing is pretty tight. Once it really consolidates into such a narrow range towards the apex, it gets to a point where there isn't much more room to really need to adjust it anymore. So I would agree that that is an important pattern, and something that is very interesting to me is the 50 period moving average. Notice how from like the 22nd to about the 1st of August, we were really rolling that thing over. That's like a textbook reversal sort of curve following a major move. We got the death crosses, we've got price spending time below that moving average, which allows it to roll over after a huge move. So that really looked like it was in a perfect setup for a prolonged correction down to 7,000 to 8,000 or so. And now look what's happened. We've gotten the golden crosses have come back, and we have spent enough time back above that 50 MA that it has flattened and now has actually started to angle back up. So due to that 50 MA, I would agree with Tone that break to the upside is the most likely.
All right, so that's all I have to say about the 4-hour chart, unless you have something to add with yours.
Nope, I really covered what I wanted on the daily and weekly.
All right, I'm not going to get into the lower level time frames. We're already been on this for quite a while. So the other day when Joe and I got into this whole conversations about altcoins, and lots of altcoins were bottoming on 9s and sequential, but it looks like they're just plummeting. I mean, here's the daily Ethereum. I mean, look, just for shits and giggles, I mean, Ethereum just today, is down almost 5%. Today. Litecoin is even worse. Litecoin is breaking the point of no return, as I like to call it at this point. This week, Litecoin is down, well, from last week's close, Litecoin is down 15% this week against Bitcoin. It doesn't look like much on this chart, but that's 15% in 1 week.
That is very significant. I mean, that is huge. Just the way that they have been melting down through support with no real looking back. I mean, this is just absolutely beautiful. I've been publicly shorting ETH against BTC since 0.025 with a target of 0.008. And I have also been shorting Litecoin against USD about 4 weeks before the halving, went short there at about 114. So I am just licking my chops at these charts and really excited about the long-term implications.
And let's talk about those long-term implications, because I've been thinking about this week, and we touched upon it with Joe. I've been going back through like my numbers. Look, I know I'm not the most, I know I may not be the most popular person this year, being a bear as the price of Bitcoin is rising, but my numbers on my YouTube channel, on my Twitter, like my following numbers, they're not changing all that much. Like there hasn't been any major significance. Remember when we talked about looking up buy Bitcoin and the word Bitcoin on Google Trends, and it's not happening. And it's pretty clear to me that new people are not coming in. I mean, I remember the days when I was getting 1,000 new followers on Twitter every day, right? That doesn't happen anymore. So to me, yes, the price of Bitcoin is going up, but why? There is no mass adoption right now. There's no noobs coming into the space. I mean, 90% of the people watching this YouTube channel watched it last year and the year before. Okay. So, and the only explanation I have for, I mean, sure, institutional investors may be getting in. That's the wild card. But I think it's this. I think it's when markets were rising all throughout 2017, shitcoins were rising faster. And where is that money coming from? Well, it's not coming from anywhere, right? Because it's just, the money gets created out of nowhere when these altcoins were worth so much money, right? Because you're trading the bubble. But since mid 2018, and especially here since late 2018, that value starts to disappear. And it's very possible that 80% of the reason why the value of Bitcoin is going up, besides, the Tether, conspiracies, right? Or fact, we'll find out. Besides the Tether situation, it's very possible that the Bitcoin trading markets are so illiquid that this exodus out of altcoins is what's really been driving the price of Bitcoin. And it's not new money coming into the system. Maybe institutional money, but not retail money. And we're going to get to a point very soon where there's no more money to exit out of shitcoins. And what happens to Bitcoin then? Because the masses aren't coming to buy it.
You make a lot of really good points that would probably make for a show in and of itself. My first inclinations is to very much agree, but also have some disagreement in terms of the masses. Generally, I wouldn't expect the masses to be coming right now before we're creating new all-time highs every other week.
Yes.
Right now is pretty equivalent.
Critical point. Sorry. We would need this exodus of shitcoins to bring this thing to new all-time high to spark the masses to rush in like in 2016 and 17.
Exactly what I think. I think it's still a little too early to be. I think that the 1,000 followers per day and the real explosion of interest organically from Google and everything else, I think that is around the corner. If we are able to make new all-time highs and sustain that for a year, basically leading up to and following the upcoming halving. If we are able to do that, and then all over the news, all they're talking about is the halving and the decreasing supply nature, yada, yada, yada. Now we're going to get that stampede of people that are coming in waiting to buy the top. But I still do agree that I think the biggest driver of the price action for Bitcoin for 2019 is this chart right here. The market cap dominance is, I believe, the single most important driving factor for the price of Bitcoin. And I have noticed, just notice how it succinctly it trends in years. From 2017 to 2018, there was 1 year where the alts took over. And it was all about the next Bitcoin and Bitcoin 2.0, yada, yada, yada. So from 2017 to 2018, it went from about 90% market cap dominance all the way down to about 36%. And notice how it bottomed right.
It was 995, man.
It's crazy. Absolutely crazy.
I know.
And then it bottoms right, like that run starts right at the beginning of 2017 and it ends right at the beginning of 2018. And then for 2018 to 2019, we basically just kind of range between 35 to 50. Bitcoin does gain back a significant amount of its dominance in the bear market, but that isn't really ripping it back like it is doing throughout 2019, especially since we've broken through 56% in May. As that has happened, that's when Bitcoin really just took off on this huge parabolic move that I have not seen in almost, there's like one other chart that I can think of that looks like the Bitcoin chart of 2018. That's just such a huge move that has followed such a short period of consolidation that it is very different from almost any other chart that I can find. And the main explanation to me is that there is a mass exodus from alts, which is causing a very unique sort of supply and demand, which has caused a very unique chart shape.
Now, here's the potential bad outcome of this, right? It's obvious that new retail is not coming in. Do we agree?
I don't know enough to say that it's obvious, but I wouldn't think that they are right now. No.
Right. Okay, fine. We're both leaning that retail is not rushing in.
Agreed.
Fair to say?
Yep.
Now, we're both leaning that institutional investors are probably slowly coming in.
Yep. Mm-hmm.
And we both agree that this exodus out of shitcoins is driving the price high.
That and the proximity to the halving.
Right. Now, here's how real financial markets work. If this thing, along with the halving and the death of shitcoins, starts to drive this thing towards all-time highs later this year or next year, and that's when the retail starts to rush in, they're probably going to end up buying the top because the retail that's getting in now is going to be the one selling it to them.
I couldn't agree more. Yep.
Sorry, not the retail, the institutional that's buying it now is going to be selling it to the retail at 25 and 30K.
Absolutely.
So, how high can that go? Who the hell knows? But based on Google Trends and just based on our follower numbers, it doesn't feel like retail is getting in. So if retail is getting in, the later in the cycle retail is going to get in, the more likely it's the institutions that are going to be selling it to them.
Yep, absolutely. That is how all markets work.
And it's not even because institutions are interested in, or it's some kind of a diabolical ploy by the institutions to crash the price. It's because institutions are responsible for their investors. And if they are up significantly, they're getting out.
Absolutely. That's something that I've thought a lot about, is where do you draw the line between manipulation and just having so much money that you can't get in or out without quote unquote manipulating the market. Right. So that is definitely a phenomenon that happens. That's what happens with the Wyckoff accumulation and distribution. That's what happens with blow off tops and the big volume spike. I mean, it's in every market that is the common occurrence.
All right. So right now, I'm curious what happens next week in Bitcoin's dominance. I mean, we've already seen it go up from 66. Straight up to 71. And these are significant changes. And I think this move from 70 to 80 in Bitcoin dominance is the biggest factor here, because after that, there's not that much value left in the shitcoin space to move over. So this is it. These are the final touches. Now, it really depends how illiquid a lot of these order books are on these exchanges. And that's going to deter, or how fast people are moving out of altcoins to drive the price. For example, today, considering how much Litecoin is down and how much Ethereum is down, Bitcoin didn't exactly smash all the way up, right? I mean, sure, it rallied off of yesterday's lows, but we're not exactly, breaking out of that $14,000 zone. So there's not that much left. And what happens, and we talked about this earlier with Jimmy, as these shit coins lose value, they lose hash rate. And it becomes dangerous to transact in them because, they're insecure. A few $1,000 and you can 51% attack the damn thing.
Yep, absolutely. And it's the miners are going to get squeezed. I mean, I'm thinking of Ethereum specifically. On their last fork, they decreased the miner reward, which if the price continues to go down and the reward doesn't have a mechanism to re-increase itself to adjust the difficulty along those lines, which as I understand it, they would need a whole new hard fork to do that. Now you could be in a position where you've got a chain that costs more to operate than the miners are getting paid, and that ain't going to last for long at all. So everything is adding up. It is the perfect storm for these things to really crumble. And as these major areas of horizontal support break down, that's when the dominance is going to continue to skyrocket, basically. And I am very confident that we will see 2019 as the year of the return to 90%. And I think that come December, we will be back above 90% on the Bitcoin market cap dominance. I've been calling for that for the whole year, and I wish I could make a bet on that specifically outside of just longing Bitcoin and shorting alts. I want to, anybody out there that wants to bet under 90%, I'm interested, as long as we can figure something out.
You guys heard it here. Yeah, I mean, looking at Bcash, it right now it's at its second lowest close ever versus Bitcoin, and it's not that far from the lowest close ever. So maybe next week. So I mean, they're achieving like all-time lows at this point, like a lot of these forks do, and BSV is probably worse. All right, let's have yeah, like just the other day, right, when I first made this chart, like a week ago, Litecoin was still positive for the year versus Bitcoin, and now it's down 14%. Jesus.
It's beautiful.
Well, what a difference a week makes, right? Gold, again, see, this is that same environment, right? You have this consolidated 9, then a green 1. Like this green 1 does not get me into the bullish trade after a 9, but this green 2 does once it goes above the 1. And this is another one of those unfortunate situations where in a perfect world, I would have rather had this very compressed 1 candle to get me into the bullish trade at, let's say, 1435 instead of 1465. And in the gold futures markets, that makes a big difference. Might not make as big of a difference in the gold ETF, but that's what it is. And right now, I am bullish gold. And even though the dollar is still pretty strong, it looks like gold is rising across all currencies. And I think someone asked me to glance at gold in British pounds. So before I forget, XAU in GBP. And that's what you want to do. If you really want, whoa. Yeah, looks good. It looks good. Again, see, this is the classic sequential, right? You accelerate into a 9, you have some weakness on a 9, a perfect 4-candle correction, and then you enter the countdown phase where you have your aggressive, your combo, and your sequential. And your sequential is coming 1 day before the 9. So you can squeeze out another day if you want. And this is where you take your profit. And this is a green 2 going above a green 1, going above the 9. So you might as well go long again for yet the repeat of the countdown phase.
Yep, that is pretty sweet.
Yeah, classic sequence. And you can even go back to the prior 9. It's the same thing. 1 to 4 candle correction. You enter back. I'm sure this was a green 2 going above a green 1. I'm pretty good at like recognizing these things. And it's above the 9. You're back here. This is your caution flag. You might consider taking some profit. You can stick around, wait for another 9, repeat all over again, and now we're repeating it again. Now, every time you do this, it becomes a little bit more and more risky because you're getting overextended, but you stick to your rules and you adjust your stop losses accordingly.
And if you
Uh,
could, real quick, take a look at the gold against the Japanese yen, because I think that it is literally creating a new all-time high against Japanese yen.
wow. Yeah, I
Which,
will in a second, but look at this, right? A 9 sell right into a 9 buy right here, gold versus the British pound.
mm-hmm.
And
And look
then
at
this
that
9
aggressive 13.
then this 9 completes on a 13. So, I mean, this 9 kicked off a countdown phase, and that's when it ended. And then, boom, you go right into this mess.
Beautiful.
So, XAU against JPY.
And this chart really is puzzling the heck out of me because the Japanese yen isn't that weak relative to all other currencies for this chart to be making new all-time highs above like the 2013.
Wow.
Doesn't make sense.
Yeah, I guess the Japanese yen was a lot weaker back then. Sorry, a lot stronger back then.
Yeah, this is really interesting.
Yeah, this is a very good sign for gold. It means there is actual genuine demand as it's rising across all currencies. Normally, this happens when you have a weaker dollar because that really boosts gold. But yeah, I guess all these trade wars and currency devaluations and the Chinese devaluing their currencies is really catching up with gold. And right now, it is the smart move to be long gold.
Absolutely. And silver even is starting to look interesting.
Look at it on the Canadian currency.
Wow. Wow. That's amazing.
Yeah, 2000. Yeah, because back then they were almost at parity, the Canadian dollar and the US dollar. And now the Canadian dollar is at a 30% discount to Americans.
Ah, that explains it. I hadn't thought about the exchange rate back of the US dollar and the other fiats back when gold was making its prior all-time high. So that is very interesting. Yeah, that makes sense.
Yeah, I want to pull up the Canadian exchange rate. Yeah, it's a good time for us to go over to Canada, you know. Not as good a time as it was in 2015, but it's certainly good enough. This is the weekly chart. And yeah, back then, look, 2012, 2011, the Canadian dollar was actually stronger than the US dollar when gold was making its all-time high.
And look at that Adam and Eve bottom with the fake breakout that I definitely thought was going to have some more follow through. That starting that sharp spike in 08 for the Adam, and then that beautiful cup from 2012, and then it gets up and breaks through and then just comes right back. I mean, that is a very interesting chart.
Oh, look at this. Look at this. You can't make this shit up. Look at that candle.
Whew. Perfect.
Look at that. Oh my God. Like, look at this beautiful hammer 913 weekly scale. And look how much it fell to get there.
Fascinating.
Jesus. Wow. All right, let's so we covered gold. Finally, S&P 500. The markets are about to close. What a rally. And remember when this was falling and how everybody was panicking?
Yep.
Except this YouTube channel. Guys, the markets aren't ready to collapse yet. I'm sorry. Like, I'm sorry that a lot of people want them to collapse. I don't think they're ready to collapse yet. So there's not much to say other than I would not be looking at shorting opportunities early next week. I would be looking at potential buying opportunities early next week. That is a beautiful candle. To be honest, I would love to see this candle go up a little bit so that it has a green outline and not a red outline. So we're literally like the smallest amounts off, probably like a point on the S&P. The close is at 32 and 10 cents, and we are at 31. So we're like 1.2 points on the S&P from having that be a black candle instead of a red candle, and that would be nice. That means we have no gap between the two, even though the gap is officially closed. But I'd like to see it close at the close. We have about 20 minutes to go, and I'm not scared. I'd rather look for buying opportunities. And if we look at the stock market real quick. There are some. I mean, we have the notification service that comes up a lot, but I'm gonna flip over to just like Titan. This was that stock that I kept talking about, how it was on a monthly, weekly, and daily big drops. We're only on a 5 on a weekly scale, but if you go to the daily scale, you know, we tops on a 9, falls 25%, and it's now up 4% since, you know, bottoming on a 9, one candle before on a reversal candle. So these are the kinds of opportunities you want to find, but maybe not on the Indian market, but maybe on the US market. But yeah, lots of stocks were hitting 9s at the lows that are now looking pretty good, including Amazon. And so buying off those 9s definitely made sense. This one wasn't a great buying opportunity. And but others were. I don't really want to go through all of my stocks, but that's basically the idea. I think somebody asked for MGI. I can't really remember them all. Oh, MoneyGram. Oh yeah, MoneyGram started to rally a little bit. Yeah, I made fun of MoneyGram. This was the earnings call where they announced Ripple. MoneyGram isn't doing too well. I mean, it's been down here before. I guess it gained I mean, this is a very volatile stock. Look at this. Again, not something I would necessarily be interested in buying. Jesus. Now, look, that's not good. That's not good. But people asked in the chat the question, if this is actually a good example. The question was, and I've answered it many times, if we go into a big economic catastrophe, what happens to Bitcoin? And my answer is not good, because look at what happened to MoneyGram, right? MoneyGram makes money on fees from people sending money from one side of the world to another. What happened in 2008 financial crisis, right? Businesses went bust. It was hard to make money in, you know, Europe and America for migrants to send money back home because jobs were scarce. So what happens to MoneyGram? I mean, this could have been also, you know, a bad management of company, right? But let's assume the company was being managed just fine. What happens is economic activity goes away, and a lot of people, you know, they weren't using MoneyGram anymore because they weren't making enough income to send it back to their families. So same thing with gold and Bitcoin, right? If you're not making any money, how are you going to go out and buy gold and Bitcoin?
Yeah, I agree that, and especially in the short term, a financial crisis would almost certainly not be good for the price of Bitcoin, even if it logically maybe should be. In financial crises, nobody is logical. Look at what happened to the price of gold during during 08. I mean, it dumped along with everything else, and that right. Should be where everybody was flying to safety. But nobody was thinking logically. They're running around with their hair on fire, trying to figure out how they're going to feed their kids, and they don't give a crap if that means they have to sell their gold because now their stocks are worthless. So I definitely do not see a real world scenario where a financial crisis is good for the short-term price of Bitcoin, but definitely in the medium to long term, I do think that in line with Austrian economics, that there is a Band-Aid that needs to get ripped off that will cause one step back before we get to take 2 steps forward. So in the long run or medium to long run, a financial crisis could absolutely be what leads to hyper Bitcoin hyper Bitcoinization, but the repercussion of the 5 to 10 years that follow a major financial crisis would not lead anybody to think that that's what is actually happening.
Yeah, and now I just pulled up MoneyGram. Besides the fact that look at all of these nines at almost every single peak in the damn chart, and one right here. Look at how much better, Western Union performed than MoneyGram.
Yeah, that's wild. That has been stuck in a range like I haven't seen in a while. While the market has been shooting straight up, this thing can't go anywhere. It did do better, didn't fall as hard, but man, it certainly hasn't done anything over the last 19 years or 9 years. And what's blowing my mind is like Visa and MasterCard are just straight moonshots. So that's
and this is what I mean. Like people are like, Western Union and is ripping you off on your sending money overseas. Really? If they were, don't you think their stock would be through the roof?
You would sure think so.
Don't you think they would be making a shit ton of money, and like professional investors would see that?
Yeah, that's pretty tough to argue with, if you ask me.
So so there's Western Union. So going back to MGI, just for a short-term outlook, if we look at it on a weekly scale, it is pretty damn bullish. It's on a green 2 going above a green 1, bottomed on a 13. So it's bullish from a short. If you want to take a swing trade at it, that's fine. The Ripple news can give it a boost, and on a daily scale, it's about to top out tomorrow with a 9. So just keep that in mind. Don't ever short a $3 stock. That is perhaps one of the dumbest things you can ever do in the stock market. But keep in mind that if you have been long and you just made 40, 50% or whatever, 20% on this move from $2 up to $3.25, you may want to consider taking some profit.
Yeah, this is a really interesting chart. I'll give my thoughts and then I will have to sign off afterwards. But first thing I'm seeing here is a broadening bottom or a Selgin buy setup with the peak in the middle of June being 5, and then the beginning of June, that bottom, that's 4. And then 3, 2, 1, we've got definitely multiple higher highs and lower lows. And the second thing that is interesting to me is Consensio. This is starting to really look like a textbook reversal. And this is a chart that if you are interested in Consensio, I would suggest studying this because this is pretty textbook. Notice how far the price got extended from the long-term moving average. It stayed way below the long-term moving average as the long-term moving average trended sharply downwards. And then the price found some horizontal support. It forms a bullish pattern as it works its way back to the long-term moving average. On that first test, you would absolutely expect that to hold as resistance because it is angled downwards. That should be a very strong area of resistance, and it was. On the second test, we go ahead and create a higher high and leads to a higher low. Now we see the long-term moving average starting to flatten out, and the short term has crossed the long-term moving average for the first time probably in years, and now the medium-term moving average is postured for a golden cross with the long-term moving average. So if we get a 9 and then we get a correction that pulls back and into a golden cross, this would be a pretty ideal buy setup as far as I'm concerned. So great chart there, and I really appreciate you having me on, Tone. I will have to jump off, but I'm sure you've still got some things that you're wanting to cover.
No, that's it. We're going to call it a day. I'm just going to pull up my website one more time. Guys, check out the Financial Summit, which Sawcruhteez is going to be a part of. This will take place October 19th to 25. in Bali. Come check it out. We have Willy Woo. We have Van Zen. We have Ugly Old Goat. So sad about Tyler, but Leah will be joining us as well. There'll probably be a few more traders that you know, love, or hate. You get a bunch of subscriptions from pretty much everyone that does stuff. You get my webinars, you get Hyperwave webinars, you get Van Zen subscription, you get Ugly subscription. Everyone was nice enough to throw in stuff because we want to, hang out with people that want to learn or just collaborate and sign up. You can submit a trading strategy that you want to teach and educate with for a 50% discount. We will review these as you submit them. So go ahead and check that out. We will open up registrations for Unconfiscatable later this month as well. You can check out the website at Unconfiscatable. I have a workshop in Dallas coming up next week, and I'm still want to teach an options workshop in about 2 weeks. I am off to Toronto. You can check out my calendar. We're going to be filling this out this weekend. I am off to Toronto for Futurist, then BitBlock Boom, then the options workshop, and then a lot of stuff next month in September and October. So go ahead and check out the calendar. If you want to support this content, check out the affiliates page. All right, guys. Thank you so much for watching. Again, thank you, Sawcruhteez. I think we had some really good discussions. And one of these days, we'll start keeping these shows to an hour. We'll get there one day. Good luck trading, guys. And I will see you all on the next one.
Thank you very much. I appreciate it.